Struggling with the same old Euro USD or gold trades? Maybe the problem isn't your strategy, it's your choice of currency pairs. What if I told you there's a hidden gold mine in Forex, currency pairs with massive profit potential that most traders overlook? They are called exotic currency pairs. You might have heard of them before, but in this video I'll show you exactly how to trade them successfully and capitalize on their unique opportunities. Let's start with what exotic currency pairs actually are. In Forex, exotic currency pairs consist of a major currency, like the USD or Euro, paired with a currency from an emerging economy, such as the Turkish lira or the South African rand. Unlike major pairs like Euro, USD, exotics have higher volatility and lower trading volume. But here's the key: these exotic characteristics create unique opportunities. For example, USD TRY is highly sensitive to Turkey's economic and political events. Changes in interest rates or political crises can cause massive price swings. If you analyze the market correctly, you can take advantage of these movements and make significant profits. What's also important to remember is that exotic pairs don't always move in sync with major pairs. For example, USD ZAR is heavily influenced by gold prices. If you understand gold trends, you can predict USD ZAR movements and trade more effectively. But trading exotic pairs isn't all sunshine and profits. For example, their lower liquidity means that you will have higher spreads and transaction cost, and of course the wild price swings can mean being subject to unpredictable moves that can wipe out your account if you are not careful. For example, if you're trading Euro TRY and the Central Bank of Turkey suddenly cuts interest rates, the price could skyrocket or plummet in seconds. These fluctuations create great profit opportunities, but if you enter the market without a strategy, you are at risk of major losses. So, how do you trade exotic pairs successfully? Here's the game plan. First, master fundamental analysis. Exotic pairs react strongly to economic and political news. Stay informed of key events like central bank decisions and political developments. Second, use technical analysis. Indicators like RSI, MACD, and support and resistance levels will help you pinpoint entry and exit points. Third, risk management is everything. Always use stop-loss orders and control your trade size because high volatility equals high risk. And now you know what exotic currency pairs are and how to trade them like a pro. They offer massive potential, but only for traders who take the time to analyze and strategize. Have you traded exotic pairs before? Which ones gave you the best or worst results? Drop a comment below, I'd love to hear your strategy. If you found this video helpful, hit the like button, subscribe and turn on notifications so you never miss a trading tip. Until next time, trade smart, stay profitable.